Popular opinion tells us to maintain a positive attitude, to manifest good things in our lives, right?
Yeah, maybe, but our next guest, so you can profit in times of pessimism. And joining us right now is author David Skarica. His new book is Mega Returns Profit from Maximum Pessimism. And David, you know, they talk about how disaster sells, right? And the fact is that it can also, I'm guessing, create opportunities, right?
Well, yeah, like in terms of like buying, like pessimism is you want to buy assets that are beaten up and cheap. That's what John Templeton did, or that's what Warren Buffett did. Actually, I have a stock today that's up 10% on my watch list, and a stock I talk about in the book yesterday was up 15%, and it's up another 5% today. And these are like beaten up companies that are down 80 to 90%. And you're looking for like a turnaround in their business. And that's kind of what I look for. And I talked about this on a show yesterday that it's kind of like basic math. I know everyone wants to chase NVIDIA or these kind of hot stocks, but if a stock completely collapses, say from $50 to $1, and it has prospects to turn around, it's a lot easier for a stock to go to 1 to 5 than it is for that, like say a stock that went from 1 to 50 to go to 250. So, but you have to kind of find those companies that are beaten up and have the potential to turn around.
So how do you find those opportunities? How do you is the market overvalued, and where are those opportunities that you're speaking of?
Well, like, for example, the market's been overvalued for a while, but even during this huge, like, a bull market in stocks, like Greece in 2012, or commodities in 2015, or oil in 2020. There's been all these opportunities where certain assets have gotten cheap. So these, like one of the companies that one I talked about that was up 15% yesterday is a 3D printing company. And actually they could benefit from tariffs because a lot of these things like auto parts or things that are imported, they can now 3D print cheaper because of tariffs making some of the imports more expensive. So they can potentially benefit from that, and it can turn around the business. This stock, for example, has fallen from $100 a share about 10 years ago to $2. So like that's the kind of thing you have to look for. And like I said, I think the key component is you need a catalyst, because a lot of stocks can collapse and stay cheap forever. So you need something that can turn it around. Like one trade that John Templeton had that was very famous was he bought 100 stocks under under $1. And just before the war started in World War II, and his basic philosophy was the war effort was going to turn around the economy, increase industrial production and demand, and then these companies could turn around. So he saw the catalyst there.
We've got like a half a minute. Do you look for stocks of a certain size, of a small float? In other words, not a whole lot of outstanding shares, ones that can have a lot of activity for relatively smaller amounts of money?
Yeah, Templeton too, and I kind of base most of my stuff off him. He was a small cap guy, and that's what I am. So I'm looking for companies that have a couple $100 million in market cap. And again, going to a couple $100 million to a couple billion are good. And by the way, I saw your question, your last guest. I am drinking wine because I had a great week. So
now all you need is the pasta. Sounds good.
Yeah.
David Skarica.
Thank you very much.
Thank you so much. Great talking to you.